You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 27th day of December, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. Now, the first broadcast is private, members only, and those taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in a bit, he'll walk you through the process, step by step. Do it today. We'll get your indicators enabled today. And you'll have the weekend to get familiar with them. And yes, we have another holiday week next week, but don't worry, you'll still get 5 consecutive trading days where you have access to not only the live training room, but everything our passport holders have access to. We treat you just like a passport holder for 5 consecutive trading days so that you can make a well-informed and intelligent decision whether or not what we do is right for you. Now, the second broadcast of the day, this broadcast, the afternoon broadcast, it's open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. Going forward, what will happen, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit of doing it that way is you'll have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's very easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network. But you don't have to remember all that. Just remember CFRN, because you already got the YouTube part down. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can literally see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just pick a few days at random. Skip a year, watch a little bit. Again, you'll literally see how we've evolved over the years from where we were to where we are now. youtube.com/CFRN. Our schedule each afternoon, we begin with our devotional, a word of prayer, a little bit of world news and market news, a recap of the Logic 247 alerts, the concierge trade alerts, and then about 12:50 or 50 minutes into the broadcast, Michael joins us for a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for a half an hour, and then I'll wrap things up with our good word for the day. Now, the topic of the devotional that we're in right now, we're in day 8 of 12. So if you missed any of the previous days, you can always go have a listen on our YouTube channel. But the topic of this devotional, it's strengthening your faith with the heavenly gifts, the gifts of the Spirit. Our scripture today is Luke 9, verse 1 through 5, and I'm going to share it from the Message translation. Jesus now called the 12 and gave them authority and power to deal with all the demons and cure diseases. He commissioned them to preach the news of God's kingdom and heal the sick. He said, don't load yourself up with equipment. Keep it simple. You are the equipment. And no luxury inns. Get a modest place and be content there until you leave. If you're not welcomed, leave town. Don't make a scene. Shrug your shoulders. Move on. Now, as I said, we're in day 8 of 12. First couple of days, we talked about what the 9 different gifts of the Spirit are. Then we talked about the fact that while these are free gifts, we have to ask for them. So today we're going to talk about asking for the gift of miracles. Asking for the gift of miracles is an act of faith that comes from the desire to see the power of God manifested in the world in an extraordinary way. Jesus himself gave his disciples power and authority over all demons and to heal diseases. He also sends them to preach the kingdom of God, accompanied by signs and miracles. This gift is a sign of God's love and power. He wants to draw people to him and demonstrate his greatness. Miracles can be supernatural events, such as deliverance from impossible situations, multiplication of resources, or special protection in times of danger. Asking for this gift means wanting God to intervene in reality in ways that go beyond our human capabilities. It's important to remember that miracles are never for personal glory, but always to testify to God's presence and strengthen the faith of those who see or experience these signs. When we ask for the gift of miracles, we must do so with humility, knowing that God's times and ways differ from ours. He does not always answer as we expect, but every sincere prayer is heard. Jesus promises that those who believe in him will do even greater works because his Spirit will always be with us. This promise encourages us to ask with faith, knowing that God's capable of doing the impossible. Join me in a word of prayer. Heavenly Father, thank you for equipping us with your power and authority to share your kingdom and bring healing to the world. Help us to trust in your provision as we go, boldly proclaiming the good news and serving others with humility and love. Teach us to walk in faith, leaving behind what does not welcome you and focusing on the mission that you have set before us. May our lives reflect your grace and truth. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Friday. Friday came quick this week, huh? Or so it seems. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. The Dow is down 519 points. That's almost 1.25%. The NASDAQ is down 445. That's 2.25%. S&P 500 is down 98, 1.75%. And the Russell 2000, our man in the street, is down 48 points. That's almost 2.25%. Yeah, there's blood in the streets today after our Santa Claus rally. Crude oil is up 63 cents, trading 70.25 last. It's a gain of almost 1%, or $630 per contract traded. Gold is down 23 bucks, trading 26.30.90 last. It's a drop of almost 1%. Silver down 44 cents, trading 29.45 last. That's a drop of 1.5%. In the Asian markets at the close, the Nikkei posted a gain of 713 points, almost 2%. Shanghai gained just 2 points. The Hang Seng fell 8. And in the European markets at the close, FTSE up 12, the DAX up 135, the CAC up 72, and for the CAC, that is exactly 1%. So we had a mixed day in Asia. It was a green day for the UK, and it's a big red Radio Friday here in the US of A. It'll all make sense when we bring up the charts. Not anything we didn't expect. So let's take a look at some world news. Azerbaijan opened a criminal investigation yesterday after a passenger jet crashed in Kazakhstan, killing 38 people on board. At least 29 people survived, though all sustained injuries. Analysts suggest that a missile from Russia's air defense system, which recently downed Ukrainian drones in the region, likely struck the aircraft, though Azerbaijan's president has urged against speculation. Yeah, he doesn't want to tick off Putin. Now, this is going to blow your mind. At least 6,000 prisoners escaped from a high-security facility this week in Mozambique. 33 inmates were killed, 15 others injured in confrontations with security guards. The facility, roughly 9 miles from the center of the country's capital, was one of 4 prisons breached Wednesday as Mozambique experiences widespread civil unrest. Earlier this week, the Constitutional Council certified the long-ruling Frelimo Party, who won the country's disputed October 9th presidential elections. The announcement came after weeks of violent protest over voting irregularities reported by international observers. More than 250 people are believed to have been killed since the election. Among those who escaped from prison are over 24 terrorists. Mozambique is fighting an ISIS-affiliated insurgency in the country's north that has killed thousands of people and resulted in the kidnapping or displacement of more than 100,000 others. It's going to make quite a intriguing Netflix movie, I'm sure. Can you imagine if you live in a town where there's a high security prison and 6,000 prisoners escape? Now, they're all looking for somewhere to go, right? They all need some place to hide out. Lock your windows, lock your doors. Granny, get your gun. Now, how many of you already thought that the bald eagle was the official bird of the United States? I would have swore to it. It now is, by the way. President Joe Biden signed this legislation on Christmas Eve. The recognition came as Biden signed roughly 50 bills. Now, whether or not he had any clue what he was signing, I don't know. Including an anti-hazing law. I don't even know what that's about. Weeks before his term ends. I think we all know that a lot of weird stuff's going to happen between now and the end of this administration. The bald eagle has been featured on the U.S. Great Seal since 1782, a mark used by the State Department and printed on the dollar bill. The bird is the only eagle indigenous to North America and is considered sacred by many Native American tribes. The bird of prey became endangered in the 1900s amid hunting and pesticide use, with nesting pairs dropping from an estimated hundreds of thousands in the 1800s to fewer than 500 in 1963. Hunting bans and conservation efforts returned their numbers to 19th century levels. While hunting or selling the birds is illegal, members of federally recognized native tribes can apply to receive eagle feathers for religious use from the National Eagle Repository, where dead eagles are brought to reduce illegal trade. Way to stay on top of things, Joe. That's, I guess, what happens when you assume. I just assumed it was. U.S. stocks headed into afternoon trading on a downbeat note as Wall Street slogged to the finish of a largely triumphant year. I already gave you the numbers. After stacking impressive gains this year, some of the biggest names in tech are losing ground as investors take profits, rebalance their portfolios, or reassess their lofty valuations. Tesla lost more than 4% today. Nvidia dropped 3%. Amazon fell 2.5%. Wall Street has just 3 trading days remaining and a 2024 full of big gains. But markets have been unable to mount a Santa Claus rally into the end of the year. Well, we had a Santa Claus rally into Christmas. The end of the year, it's a different story. From Reuters, OpenAI outlined plans today to revamp its structure, saying it would create a public benefit corporation that would make it easier to raise capital and remove the restrictions imposed on the startup by its current nonprofit parent. Now, we didn't know that either, did we? We actually have some news today. Under the proposed structure, the ChatGPT maker's existing for-profit arm will become a Delaware Public Benefit Corporation, PBC, a company that is structured to consider the interests of society in addition to shareholder value. The nonprofit, meanwhile, will have a significant interest in the PBC in the form of shares as determined by independent financial advisors, OpenAI said in a blog post, adding that it would be one of the best resourced nonprofits in history. OpenAI started in 2015 as a research-focused nonprofit, but created a for-profit unit 4 years later to secure funding for the high cost of AI development. Its unusual structure gave control of the for-profit unit to the nonprofit, and was in focus last year when Sam Altman was fired as CEO, only to return days later after employee outrage on the move. As the expensive pursuit of artificial general intelligence, or AI, that surpasses human intelligence heats up, OpenAI has been looking to make changes to attract even more investments. Its latest $6.6 billion funding round, at a valuation of $157 billion, was contingent on whether the ChatGPT maker can upend its corporate structure and remove a profit cap for investors. That's a new one on me. Big Pharma. The U.S. Appeals Court on Friday, today, revived a whistleblower lawsuit against the Swiss drug maker Novartis of paying illegal kickbacks to doctors to introduce them to promote its blockbuster multiple sclerosis drug Gilenya. In a 3-0 decision, the Second U.S. Court of Appeals in Manhattan said the whistleblower, Stephen Camburn, can try to prove that Novartis violated the Federal False Claims Act by holding sham speaker events to boost Gilenya sales. Camburn, a former Novartis sales representative, said the drug maker paid doctors thousands of dollars and treated them to dinners at high-end restaurants to speak at purportedly educational events that were actually social in nature. So while this may be news for Novartis, it's not news in the world of Big Pharma, because that's how they roll. As we discussed a couple weeks ago, the FDA, the Food and Drug Administration, the ones who have to put their stamp of approval on a drug before it's released to the public, they get 50% of their funding from, surprise, Big Pharma. Talk about leaving the Finn to watch the fox. to watch the hen house. Unbelievable. But this is the world in which we live. Now, we talked about the unrest in Mozambique. We have two different situations. There's fighting in the streets over the political unrest of, what is his name? President-elect Daniel Chapo said in an interview that he was open to talks once he takes office on January 15th. Police have fired on the crowds with tear gas and live ammunition, and roughly half of the fatalities have occurred since violence intensified after the Constitutional Council on Monday confirmed the ruling party's victory. And while I don't have a specific article to share with you, I'm sure you're all aware by now that we have a kind of similar situation cooking here in the U.S. If Speaker Johnson doesn't get confirmed, then he cannot confirm the electoral votes that President-elect Trump needs confirmed by the Speaker of the House, so he can actually be inaugurated on the 21st. So you're going to hear a lot of yelling and screaming. Trump's pretty upset too. I mean, he did everything to hit the ground running, to accomplish the things he wanted to accomplish. And now, a couple of overpaid, overage sleazeballs in Congress are about to throw the most massive monkey wrench into the works. I'm just stunned, shocked, flabbergasted, call it what you will. It's not good. It's not good. And what can you and I do about it? Absolutely nothing. We did our part. We went to the polls. We voted. We got the electoral votes. We got the popular vote. But now, can we get them certified? This could drag out for some time. Hopefully it won't. Hopefully it'll get resolved and we'll forget about it. I mean, leave the guy in his position long enough to certify the Electoral College. And then if you want to boot him, okay, at least Trump will be in charge then, officially. Okay. Now, I picked up on this the other day when Governor Gavin Newsom, he was making a speech somewhere about how wonderful he is, and his 10-year homeless plan, his 10-year plan to fix the homeless situation in San Francisco. How's that looking 20 years later? Yeah, not so good. But anyway, he was making some speech about something, about what flavor hair gel he uses. I don't know. And then he brought up the inauguration. He goes, that's if there's an inauguration. He just slid that in there. I'm like, what does he mean, if? Well, I just told you the if. All right, we're in week 334, Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's crude, gold, silver, bonds. Been a slow week. We're in week 334. Over the last 334 weeks, we have issued over 18,700 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. I don't think I've issued an alert in a couple days, maybe. No, that's not true. I issued a bunch last night. Anyway, still it's only 38 for the week. 2 never triggered. At the time the recap was done this morning at 9 a.m. Eastern, we're still awaiting the outcome of 11. That gave us 25 actionable alerts, of which a whopping 6 would have been stopped out. That's 24%. That puts us above our weekly average of 20% or less. But the fact that last week we were at 5%, it all balances out. We're well below the 20% average if you go back and look at each individual week. So we're not going to be too concerned over this. However, this week's ends up, and next week may be a little sloppy as well, because when you don't have the institutional traders at the helm doing what they do in a very predictable manner, you tend to have less follow-through on the moves the market makes, and that accounts for more stop outs. So that's the story on Logic 247. Now, the logic alerts are designed to help you learn to read the chart. Each alert has an entry price, an initial target, additional targets, and a final trade to target. Yes, you can trade the alerts, but the real thing I want you to do with the logic alerts is to draw those horizontal lines on your chart so that you learn to spot where potential resistance will be, where potential support will be, and where the windows of opportunity exist, all based on market structure. Okay? Then when you bring our humble indicators into the mix, it really simplifies things. Okay? So if you're still looking at a chart and just seeing chaos and not understanding what the next high probability move is, I can only suggest that you start using the Logic 247 alerts. Even if you don't trade them, at least use them to learn to read a chart. Because if you want to trade for a living, it's not going to happen until you learn how to read a chart. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. But our original alert service, the concierge trade alerts, they're a little bit different. They don't come out around the clock. They used to come out as a static report shortly after the Globex open each evening. We all know today's the Friday session, but for futures traders, the Friday session began last night at 6 p.m. Eastern. So I've experimented the last 2 to 3 weeks with getting them out 5 minutes before the market opens so that you're positioned to perhaps get your goal for the day in the first 30 minutes and put the mouse away. Now, I got them out last night, and what I do is I put a note in the discussion group that says, today I will get them posted, they will publish at 5:55 p.m. Eastern. And on the days when life gets in the way and I can't, I also post a note that says I won't be able to get them out today at 5:55. Okay? Now, if you're a member or trial member, read this information. It's important. You need to understand it. If there's something you don't understand, ask me. I'll clarify it for you. So what all that means is all of our members and all of our trial members had every one of these targets last night, 5 minutes before the market opened. bonds, silver, gold, the NASDAQ, crude oil, the Russell, the Dow, and the ES. Okay, so with that, let's go look at this chart. Today's action. Boom. Down we go. And look where we found, look at the high point. Now, this is a beautiful head and shoulders pattern too. The neckline's a little complicated. You see, this spike that came right down to this area in the members only workshop. I think last week. I think it was last week. Yeah. I pointed out this area and I drew in this little rectangle. And I said if the market makes it down that far, this spot where the step line crossed red and falling and turned it to blue and climbing, that should be pretty good support. And by golly, the bottom fell out of the market. It came right down to that area the following day and then recovered to close near the high of the day. Actually, the high of the day was way up there. But so then after the bounce off that area, okay, prior to that, we found support at the previous bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. Okay. So this bounce that we discussed in the members only workshop took us all the way up to that trend line. Now that trend line connects the low of August 5th to the low of November 4th. And then this was just sticking out there. And then when the bottom fell out of the market, we said on the way back up, the underside of that trend line should become an obstacle. And it turned out to be right at the 50% fib extension. And now this big red candle, that's all today. We're sitting right on top of the 24% fib extension. And it looks like we're continuing lower. So this low right here at 59.65, that's a key number. See when it pops up? Low 59.65. It's a key number. Keep it in mind. Then we have the 24% fib retracement at 59.52. Then we have the lowest fib extension. And then we're back to that low that we talked about previously that held the market up quite nicely. It's the importance of learning market structure or how to read a chart. It doesn't give you some magical superpower where you can predict the future, but you apply logic, and maybe you've figured it out. That's why it's called Logic 247, logic around the clock. When you learn how price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over again and again, you're applying logic to the chart, and then the chaos suddenly becomes clarity. And while to an outsider it might look like you have some kind of psychic gift, but you don't. And don't try to convince people you do. Just tell them the truth. You need to learn how to read a chart. The green line is called the BBC, stands for Bull Bear Cross. The pullback to the BBC holds more often than it doesn't, but eventually it will trade through. And that's where market structure kicked in, right here. See all these lows across here? See this? Now, isn't it interesting that this support, the 38% fib extension, at the time this all happened, that wasn't the 38% fib extension. It wasn't until we put in this new all-time historic high on December 6th that this area became the 38% fib extension. So when you see something like this, just know there's going to be greater meaning down the road. Now, the market appears to be able to see the future, but I promise you, I can't. Okay? Now, one last thing, the daily chart, whether you trade futures, stocks, crypto, Forex, ETFs, doesn't matter. If you'll spend 2 minutes with the daily chart of whatever it is you're getting ready to trade, you're getting a free look over the deep pockets that move price. Institutional traders, or the lack of institutional traders in today's case. Hey, see, here was our Santa Claus rally. 1, 2, 3. And then yesterday we ended up with that little doji, and that was a sign right there. This rally may be over. And then look at today. Those who participated in the Santa Claus rally decided to take their profits. Or you've got your holiday warriors out there just clicking buttons. And as I said earlier in the week, it's much simpler to trade when you know the professionals are moving price, not the hobbyist. So, just 2 minutes out of your trading day, look at the daily chart, see what the deep pockets are doing, identify where major areas of resistance and support are, okay, like we just did. Jot those numbers down, and then go to your 30-minute roadmap, and then bring up your range chart that you're actually going to execute on. This will help you stay on the right side of the street. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And if it's not broke, don't fix it. The vertical line separates today, Friday, from Thursday, Wednesday. No, Wednesday was Christmas, so that's probably Tuesday. See this right here. The market opened last night at 6 p.m. Eastern, and if you look down at the bottom of the screen there, it says December 26, 1800 hours. If you don't know how military time works, just subtract 12. 18 minus 12, 6 p.m. Eastern. Okay. All right. So this was the opening candle, but we had red and falling overhead. So, I mean, this candle opened at 60.92, and we did run up to 60.95 and a quarter. That's 3 1/4 points. You only need 2 points to get your goal for the day. But we knew we were going to run into potential resistance here. See, even blue and climbing, when it gets directly above price, it becomes resistance because it's probably on its way to becoming red and falling. So, we get below the BBC. Now we're thinking lower prices, okay? See, price was sort of trapped here. We knew we had support here, and we have resistance here. So you can take advantage of that little window, or you could just wait until you get a nice little trend going. Get a leg and a retracement, a leg and a retracement, a leg, retracement, and before you know it, you're at the short target. Price consolidated for an hour, quite a few hours, at the weekly trading zone. Now the weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price drops to a weekly zone, we expect support. Just like we expect support when price gets down here to 75/76. When price encounters a weekly zone, this zone is 60/70/71. You see all this consolidation? That's what happens 70% of the time. 20% of the time you get rejection. 10% of the time you get the slice. That's when a 30-minute candle slices through a zone like it's not even there. Although this is not really a good example, but typically when a 30-minute candle slices through, it will retrace back up to the zone it sliced through, continue in the direction of the slice. The high of this was 60.68, so it didn't make it all the way back up. All right, but boy, it sure did fall pretty, and you got the perfect stack: price, step line, red and falling, BBC. Now, as we approach this weekly trading zone, which we expect to be support until proven otherwise, notice the black step line. It's starting to hook to the right. In fact, it's directly below red and falling. See over here, they're running parallel to each other. When this thing hooks, it gets on the right side of red and falling. Now you should expect a rally back up to the BBC. It happens over and over, again and again. When the step line crosses red and falling, price is probably heading back to the BBC. Okay? All right. The Dow. This is where we opened last night. Now remember, everybody had the targets 5 minutes before, but the same thing applies here. You had red and falling overhead, so you got to expect that to be resistance till proven otherwise. But we opened at 668 and we ran up to 710. Plenty of room to get your goal for the day there. But red and falling, we got a bearish cross. Now don't forget this bearish cross right here, where the red line goes below the green line. The first time price revisits that area, whether it's a day, a week, a month, or a year, will almost always be good resistance. I don't think it'll take a year to get back up there, but it might take a few days. So down we come, and we get this big leg down, and then we get a retracement. Price always reverts to the mean. In our case, the mean is green. We call it the BBC, bull bear cross. Already explained that. But as you can see, the pullback holds, and the pullback holds, and the pullback holds, and the pullback holds, until eventually it doesn't hold. But you got to remember, the pullback holds more often than not. After this huge move down, price came all the way back up to the BBC. And there's a wick that you can't see behind those letters, but the high of this candle was 43,578. Remember, what I've taught you is that when price drops through the short target or rallies through the long target, it will quite often return to the target. And whereas you might think this would be support on the way down, consolidation, once you get below it and come back up to it, it becomes resistance. The same is true as when you break out above the long target. It will quite often come right back to the long target, and it will become support and give you another leg to the upside. Okay, here we came back to the short target, and it gave us another leg to the downside. We spiked this zone. It's by no means the lowest weekly zone, But the step line's starting to hook and we're consolidating. This is wide-ranging consolidation at the zone. Okay, but the step line's hooking, so we're going to probably get a rally back to the BBC, and then most likely another leg to the downside. So we will pick up with the Russell when I return, and we'll get through every one of these markets. Right now, Michael's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for 30 minutes, and then I'll be back. We'll finish the recap of the alerts, and we'll wrap the week up with our good word for the day.
Excellent.
All right, looks good.
All right, here we go. Good afternoon, everyone. Happy Friday. This is the final Friday of 2024. So, if you have not taken a free trial with us and you get started today, you get the indicators for today and all of next week, and then even some in the week after that. So now's the time to get started if you're going to take the free trial with us. All right. Go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. You click on that purple button, it's going to bring you to this registration page. All we ask for is your name, your email, your phone number. 5 multiple choice questions. If you have NinjaTrader, give us your machine ID. Only if you're going to use Ninja charts. We don't need the machine ID if you're just going to trade on Ninja. Okay. If you have TradingView, give us your login ID. We recommend you get TradingView so you can we recommend you get TradingView. All right, get TradingView so you can use the indicators that we have running in the room in the morning. All right, these indicators right down here at the bottom, they're only on TradingView. We don't have them on any other platform. Now, today's results. I believe we are in the wrong year here. No, this is the right year, but that's the wrong section of the right year. Here it is right here. All right. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of December, 2024. We're up 300 ticks on the NQ, 4 ticks on the Russell, 22 ticks on the gold, and 1 tick on the ES. That got us up to $1,752 per contract on the morning session. Today took 4 minutes and 1 trade to get to $1,200 this morning. So look at the month so far. We are 18 days in, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of 18 days, we got the goal for the day on the first trade. And 1, 2, 3, 4. Oh, let's just go 1, 2, 3, 4, 5, 6, 7, 8, 9, 12, 13, 14, 15, 16. 16 out of 18 days, we got the goal for the day in 5 or less trades. That's pretty good stuff. Pretty good stuff. It was a great month. It's been a great month of December so far. We have just 1 business day left that we're going to trade in December. Next week, our schedule is going to be Monday on, Tuesday, Wednesday off, Thursday, Friday on. Kind of like this week, exactly like this week. Okay, so we have 1 business day left of trading this year. And to make it our best month of the year, we only need to get about $500 or $600 on Monday. And that does not seem to be a problem lately. Using the divergence trade setup that we're using, we usually get that in the first half an hour. Anyway, on the month now we're at $15,795, averaging $877.50 per day. On the year we're now at $127,862 over 242 business days, averaging $528 per contract per 2-hour business day. Following the 24/20 blueprint, which I said I was going to do till the end of the year, and I did this morning, getting the goal for the day using the trend trades. Okay, using on the chart, using the context, and making sure we traded with the trend. We had a commodity overbought or oversold and have all 4 lines in the ribbon visible. That's what we did to get the goal for the morning, for the day this morning. Got it on the NQ this morning. Continuing that, we got 1 more day to do that, and then starting in January, on Thursday next week, we'll be doing just the divergence trades. We'll start out getting the goal for the day with the divergence trades, okay? I'm thinking we may even bump the goal for the day up to like $200 per contract. Because using the divergence trades, that's a pretty simple thing to do, okay? So, we might start out with more contracts and bump the goal up. Because I'm not going to go back to 10 contracts starting on Thursday next week. I'm not going to go back to 1 contract. I might go down to 10 contracts and start the 24/20 blueprint with 10 contracts. And just go with 10 contracts all year, maybe. I don't know. We'll figure it out next week. Anyway, following the 24/20 blueprint, you would have only had to work 70.43 hours so far this year, and you would have averaged $3,346 per hour. So I really just wanted that to be $2,400 per hour by the end of the year. And that was back in September when I said that. So we've gotten almost $1,000 per hour more as we've gone through. And this is using just regular trend trades to get that. All right, that's not adding all this new stuff in here. If we add all the new stuff in, I think these results are going to be incredible next year. Okay, especially if we up the goal for the day to 200 or 300 or something like that, because we don't seem to be having any problem getting that with one contract. All right, now let's get back in here. Okay, today we started out, well, let's just go where we got the goal for the day here. We started out with the NQ and got the goal for the day on the NQ. Let's go back to the beginning of all this. See, I tried to keep track of all the trades that triggered in there and the ones that I took. This trade right here is where we got the goal for the day. We went short right there. Now, in hindsight, I realized that was not a valid trade. I should have gone short right here and gotten the goal for the day on that one. But I missed it, but it didn't put in a lower swing. This was, if we had a lower swing, then this would have been a valid trade, but I took it and I got 26 on it. I missed that one. I missed that one. I got 20 on that. And that was where we got the goal for the day, right there. Now, from there, we had a break-even trade there. We had all these trades. You see where the vertical lines right here are divergence trades. So if you look down at the bottom, you see this, it's on the actual trigger bar. Not the trigger bar, it's on the actual trade bar. So when you're coming out of the oversold like this, you'd be buying the open, right? You're coming out of the oversold, you're buying the open of the bar that it's on. You're coming out of the overbought, you're selling the open of the bar that it's on. Coming out of the oversold, you're buying the open of the bar that it's on. Coming out of the overbought, you're selling the open of the bar. Out of the overbought, you're selling the open of the bar. So you would have sold right there at the very top. You would have sold right here at the very top. Okay, and this one right here, you would have bought right here at the bottom of this swing right here. Over here, you would have sold right there at the very top. Over here, you would have bought right here, and that would have stopped you out. But you see all these other trades we took in here. We got 20 on the first one. I don't really want to start out with the NQ. Let me start out on the left side and work our way across to the right. Start out with gold. Okay, we didn't have that much going on gold today, but there were a bunch of trades that I missed. You can see in here. These were pre-market trades. I was using gold as an example, but there was a trade here once we started trading. There was a gold trade right here, perfect trade, gold for the day. A trade right here, perfect trade, gold for the day. Trade right here, we took that one and we only got one tick on that. And then we had a break even, then we got one more tick on that. That goes to 2. And then we took this trade over here and got 20 ticks on that. Got us up to 22. Okay, and we didn't trade gold anymore today. Getting into the break, there was a trade right here during the break. The open of this bar right here, so that was enough to get the goal for the day. There was a trade right here, the open of this bar, that was pretty close to enough to get the goal for the day. There's a trade right here, the open of this bar, you would have sold enough for the goal. The open of this bar, you would have sold enough for the goal. The open of this bar right here, you would have bought, and that probably would have stopped you out. Okay, the open of this bar right here, you would have bought, and that would have gotten you the goal for the day. So over and over and over again, goal for the day, right? That was gold. Now the Russell, we didn't have much going on the Russell today either. We had one trade right there. We got 4 takes on that one trade. That's not to say that there weren't more trades. You see these vertical lines right here were valid trades on the Russell. Now I don't think the Russell did all that well today. We had one right there that was a good trade. One right here that was a good trade. I guess the Russell did all right. We had one right here that was a good trade. Actually, this would have been a short from the open of this bar. So this might have stopped you out, might not have. This would have been a nice trade. So 3 out of 4 of those were easy wins. And this one right here, we just got 4 ticks profit on it. Okay, now going back through the rest of the trades, it would have been a long on this bar, would have been good. A short on this bar would have been good. A long on this bar would have been good. A long on that bar would have been good. A short on this bar would have been enough to get your stop to break even. A short on this bar right here would have been good. A long on this bar right here would have been enough to get your stop to break even. And that was all we had in the morning session. Now in this chop here during the break, we had this chop that happened here. Normally we wouldn't trade it all in here, but there was one long trade right here that would have been the goal for the day. One short trade right here that would have been the goal for the day. One short trade right here that would have been the goal for the day. One long trade right there that would have been the goal for the day. and another short trade right in here that would have been a break even, and a long trade right here that just happened, that would have been the goal for the day. Normally we would not even trade in there. We would not even trade in there. But we had 1, 2, 3, 4, 5, 6, 7. 7 trades, 6 out of which would have gotten you the goal for the day. Pretty good stuff. Hang on. You guys can change your mind about being here Tuesday. Okay. I don't know. We'll see what's happening. I don't think we're going to change our mind because it's already been put out. But that is where all this stands on the Russell. Okay, on the ES now, let's take a look at this guy. Here we are on the ES. Let's go back to the beginning of the time here. On the ES, you see all the vertical lines in there. They're all trade setups. Every one of those is a trade setup from this morning. Okay, so we started out here on the ES with this trade. I think that was one of our first, it was our first trade. No, it wasn't, it was our second trade. On the ES, we picked up 6-6 on the first one. Now this right here would have been a long, would have worked out. This would have been a short, would have worked out. This would have been a long from this bar, that would have stopped you out. This would have been a short, you would have gotten it back. This would have been a long, would have worked out. This would have been a short from this bar. It would have been over one more bar. No, it would have been this bar. It would have been a short from this bar. That would have worked out. We took this and we stopped out. So after that, we were +6. Then we took this. We were at -4. Then we had a break even. Then we missed that one, which would have worked out. We missed that one, which would have worked out. We missed that one, which would have worked out. And that one, which would have worked out. And that one, which would have worked out. And that one, which would have been a break even. We took a break even. I screwed this one up right here. That's why it's an orange one, but I stopped out on that, and I shouldn't have. I should have had my stop at break even on that. And so we're at -14 after that one. Then we picked up 8 ticks on that to get us to -6. I missed all these trades in here. These are all good, valid trades. Now, whether they won or lost, I do not know. But if you go through each one of them individually, see right here, we would have been buying. You would have made out okay. You would have sold right there, been okay. You would have sold right there, been okay. You would have sold right there, been okay. You would have sold right there and been a break even probably. You would have bought right here, another break even. You would have bought right here, another break even. You would have sold right there, would have worked out. You would have sold right there, that would have been profitable. You would have bought right here. That looks like that would have stopped you out right there. You would have sold top of this bar, that would have been profitable. You would have bought the bottom of that bar, profit, sold the top of that bar, profit. And we actually did this one. So at this point, I believe we were at -6, and we took that, got us to -2, and we took that got us to +1. And that was where we ended the trading for the morning session. Okay, now during the break, looks like there was one long right here you could have taken. One long right here you could have taken. Both would have been good trades. One short right here. Would have shorted the top of this bar. That would have worked out. You could have shorted the top of that bar. Would have worked out. You would have bought the bottom of this bar. Bought the bottom of that bar right there. That would have worked out. And these are 7-tick range bars. So that went 8 or 9 ticks. That's the goal for the day. You know, one bar length is just about the goal for the day. This right here would have been the goal for the day. That would have been the goal for the day. This would have been pretty close to the goal for the day. That combined with this would have been a break even or a stop out. Right? This right here would have been a stop out. This right here would have been very close to a stop out, but it looks like it would have worked out. This sell right here would have been a break even. Right, so the market's got a little bit choppy after a while. This would have been a break even. We didn't have too many of these nice trades like this one right here, but that would have been okay. This would have been good. This would have been a break even, and that's all we had. So the ES had a bunch of trades today. We ended up with +1 on the ES, +1. The NQ now, let's get into the NQ. Now you can see there were just a ton of trades on the NQ, but we started out here with that one, and then I went through all these already. We started out, let me just go through the trades. I'm not going to show every one, right? We started out on the NQ with +20. Then we had a plus 48 that got us to 68. Then we had a plus 8 that got us to 76. Then we stopped out. This is our
Okay, recap of the morning session. Great way to end the week. All right, guys, we left off on the Russell. So, this was the open last night, 6 p.m. Eastern. And just like the other indices, we had blue and climbing and red and falling overhead. That walked us down to the weekly trading zone, where, as I said earlier, 70% of the time when price encounters a zone, you're going to get consolidation. Consolidation can look a number of different ways. This is what rejection looks like. This is what rejection looks like. But as you can see, when price moves up to a weekly zone, we expect resistance till proven otherwise. And when it drops to a zone, we expect support till proven otherwise. Zones are published Monday morning, 6:15 a.m. Eastern. We've published the zones every week for our members for the last 15 years. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. So 70% of the time consolidation, 20% of the time rejection, 10% of the time the slice. That's when your 30-minute candle slices through a zone like it's not even there. But when it runs out of steam, it will typically retrace back to the zone it sliced through and continue in the direction of the slice. And as you can see, the step line has crossed red and falling. Now we're beginning our rally back up to the BBC. Price always reverts to the mean. Now, it could get hung up here at the zone and consolidate sideways. If so, the BBC will drop over time to meet price. Now, on the ES, when we talked about it at the beginning of the broadcast, I said, guys, look how the step line is starting to hook right. And I said, once it gets, for those of you that were tuned in at the beginning, I said, once the black step line gets on the right side of red and falling, see, as price was dropping, they were parallel, okay? But when that dynamic changes and the step line crosses to the right side, you expect a retracement back to the BBC. And on the ES, we don't have a weekly zone in the way, so I would say there's a good degree of probability that price will make it back to 60.35 by the close of business today. Now there's one area it could get hung up right here. Okay, so you got this little triple top right here. Okay, so we could run into resistance there and price could consolidate sideways for a couple candles. The BBC will drop to meet price. And we already looked at the YM, and the YM has now crossed, and price is beginning its trek back to the BBC. It's like salmon spawning, returning to the place where they were born. Amazing. Okay, so, and now that's magic, like I talked about earlier. Okay, no psychic superpower. It's just learning how to read a chart, understanding what our indicators tell you, understanding how price behaves. So now there's a whole lot of vendors out there that try to turn that into a parlor trick, you know, the amazing Randy kind of stuff, when all they're doing is reading a chart. And they know that 90% of traders don't know how to read a chart. So they can make it appear to be magical. Well, we cut through the crap and tell you the truth. Isn't that better? I think it's better. Okay, where did the NQ find the support? Oh, here's where we opened last night on the NQ. Bumped our head on red and falling. Down we go, right to the short target. Every member, every trial member had this target 5 minutes before the market opened. We got to the target and we consolidated for quite a few hours. Briefly, red and sideways turned to blue and sideways. Then we came down, hit the zone, got a little bounce. Okay, this zone is just 21,880/81. So we bounced back up to 99. And then the bottom, she fell out. And we hit the zone and bounced, hit it again and bounced, hit it again. Now we're officially on our rally back to the BBC. Now the pullback holds more often than not. So we expect when price gets there, it will be resistance and give us another leg to the downside. But we're not going to just park a sell order there right now, and go golfing and come back and see if the monkey got a cookie. No. We're going to behave like this really is a business. And we're going to wait for price to get there. And even though the pullback holds more often than not, eventually it will trade through the BBC. So you wait for price to get there. Now let's say price closes above the BBC. Even though the pullback holds more often than not, there are times when price will trade through. So let's say it trades through, and then we get another candle open. Okay. So 21,800 up to 21,840. That would be, now I want you to see this, 21,800 to 21,840. Okay, that's the top of this candle. That's 40 points at $20 a point. That's $800 per contract traded. If you've earned the right to trade 10 contracts, then it's $8 grand. Okay. Now, that's if we trade through the BBC. We don't expect that to happen, but you got to embrace all possibilities and trade what's in front of you. In the Logic 247 channel, there's over 18,700 individual handcrafted alerts. But we know on a weekly basis, over 344 weeks, 20% of the time the market is going to do something other than the next logical thing. Why? Somebody somewhere places a massive order or pulls a massive order or goes from the buy side to the sell side, and people who are watching the DOM, they're like, oh me, oh my, and it becomes a self-fulfilling prophecy. So don't question, understand why the market, see, we expect Monday morning at 6:15 a.m. Eastern, when these zones were published, we expected that if price dropped to this zone, it would be a good support till proven otherwise. Now, we thought the same thing about this one, okay? In this, now, yesterday it was. Here we traded through it. See, this is the type of behavior that I talked about when you have a lot of non-professionals who are normally at their day job every day. They have some time off over the holidays, so the markets don't behave exactly the same as when the hobbyists are at their day job and the professionals are at their day job. Okay? But the main stuff still holds true, as you've seen. What do we got next? Crude oil. Crude came out of the gate right here last night and dropped to blue and climbing. And it actually went it actually went down. This candle opened at, oh, what was it? Come on. 69.64. And it dropped to 69.45. It's about $190 per contract traded. See how that little wick? It insisted on poking down. It was actually a red candle until it hit the target. And then it sent price back up. So we get to the BBC and the pullback holes. And then we run into blue and climbing. Support. That gets us above the BBC. We get a leg and a retracement, a leg and a retracement, a leg. Now we've got blue and climbing holding as support. That's very bullish. Okay. We hit the target and a retracement. Hit the target and a retracement. And then we come oh so close to the zone. What do we get up to? 70.58. 2 pennies from the zone. Resistance will always send the market looking for support. Support will always send the market looking for resistance. Resistance will always send the market looking for support. And support will always send the market looking for resistance. Support to resistance. Gold. Oh, gold got beat up again today. Now, this was the opening candle at 6 p.m. Down we go to the BBC. The pullback holds briefly. And there's just no real institutional buying power out there. And so we drop. And then we get support right here, which came from here, which came from here. You see that? Over the course of 2 days. It's a triple bottom right there. So that support sends us up to the BBC. Price always reverts to the mean. In our case, the mean is green. It's the BBC. So with the down close off the BBC, all you got to do is just sell the open of the next candle, which opened it at 2643.7. That's basically a $300 candle. That one candle per contract traded. Now, if you stayed with it, well, that was real nice, wasn't it? From, let's call it 44 down to 36. That's $800 per contract traded. And then price continued on down. And this low right here is the low from 2 days ago. The step line crossed here. What's price doing? It's pulling back to the BBC. Now this is a resistance times 2. Why? Well, the pullback to the BBC holds more often than not. And when price moves up to a weekly zone, we expect it to be resistance until proven otherwise. So now you have 2 good reasons why this area should be resistance. But you don't just park a sell order there and, walk away and hope for the best. No. If you want to trade for a living, if this is your business, okay, you're going to watch this thing come up here. If it trades through, then you got to be willing or be aware that there's potential resistance right here, and right here. Okay. Now, let's say the pullback does hold. Where do you expect there to be support? Well, the step line, if it's directly below price, that can be potential support. This can be potential support. In fact, as this pulls up to connect, this might turn into blue and climbing. See over here, red and falling turns to blue and climbing. Boom. Okay, got it? Got it. Okay. Silver. So where we opened last night, dropped to the BBC, set us up to the zone. We spiked the zone. We didn't quite make it to the target. Where did we make it to? 46.5. It only takes 2 pennies to get your goal for the day in silver. Okay. It's not a great beginner's market for a number of reasons, but it can definitely be a good market. Okay. Once you have a good idea what you're doing. Like this one candle here. It came all the way down to the target and then bounced back up. But it opened at 30.32 and dropped to 30.26. That's 6 pennies. It's $300 per contract traded in that one candle. Earn the right to trade 10 contracts, and that would be $3 grand. Huh. You see, when you become a member, you don't start trading live right away. You haven't learned the strategy yet. You haven't learned to read the chart. You haven't learned what the indicators are telling you. Okay, so you start out in sim. You need to put together 10 consecutive days in a row in the simulator before you go live. And when you go live with one contract. Now that you're trading live, your goal is to increase your account balance by $2 grand. It's all in the 2420 blueprint. Once you've increased your account balance by $2 grand, the blueprint's going to give you the green light to add a second contract. Now the big difference between the first and second contract is this. The first contract is funded with your startup capital, the money you funded your account with. But the second contract is funded with profit you earned in the market. The blueprint's going to tell you when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. But you only add one at a time when the blueprint says it's time, and you only add with profit you earned in the market. If you have the discipline to follow that blueprint, it greatly diminishes the potential for you to blow up another account. Now, it's not impossible, because you could break some rules, and if you do, you probably will. Okay? Stick to the script. It's been followed by thousands of traders over the years. Okay? You don't have to reinvent the wheel. Once you become a passport holder, those days are gone. Okay? We've spent the last 20 years making everything as simple as we possibly can. To become a member, send an email to support@cfrn.net. In the subject line, put, "I want to become a member." In the body of the email, put your name, put your phone number. We're not going to call you. We don't have a sales department. We don't have a phone room. Okay? But we are going to send you an email. It's going to explain everything entailed in being a passport holder. 2 hours of live training every day in the live training room. Real trades with real money in real markets. Live. And it's an interactive environment where you are encouraged to ask every question that pops into your head. And you're always going to get the same answer. If you ask a question today, and then for whatever reason 2 weeks from now you ask the same question, you're going to get the same answer. It's called rules-based trading. Now, I know a lot of you want to be discretionary traders, and that's fine. But before you become a discretionary trader, you need to cut your teeth on the rules-based methodology. Because if you can't follow the rules, then I promise you, you'll blow up an account just trying to be a discretionary trader. Okay? You gotta crawl before you walk, before you run, kind of thing. Not only will you get 2 hours of live training every trading day, but you'll get private one-on-one mentoring. No extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. The concierge trade alerts, the second they're published, every evening. Monday mornings at 6:15 a.m. Eastern, you'll get the weekly trading zones. And you'll be able to attend the members only workshop every Thursday night. Plus, you get the golden key that unlocks all the private channels in Telegram. And that includes around-the-clock support via Telegram. It really is everything a trader needs, all under one roof, one low price. All right, let's wrap the week up with our good word for the day. Don't quarrel about it. Proverbs 17:14. Stop before a dispute breaks out. Have you seen the bumper sticker that reads, "People who think they know it all are especially annoying to those of us who do"? That's a lot to put on a bumper sticker. You will find know-it-alls everywhere you go. It would blow your mind how many new people come through our doors that start telling us, like day one, how we should run our business. We've been at this 20 years, and you really should. You should do this, and it used to irritate me and aggravate me. Now it just makes me laugh. And I literally pray for that person, because I know they've struggled to find their place in the world everywhere they've gone, from high school to college to the first job to the last job to the no job, because that's where that kind of thinking ends up. Older people, afraid of uselessness, struggle to prove they still have some superior amount of knowledge. Religious people use their convictions like a club to beat others over the head. The Bible says, earnestly contend for the faith. Jude 1:3. But there's a difference between contending and being contentious. Paul writes, "Don't have anything to do with foolish and stupid arguments, because you know they produce quarrels. And the Lord's servant must not be quarrelsome, but must be kind to everyone, able to teach, not resentful." That's 2 Timothy 2:23. Now, note these 4 phrases. Must not be quarrelsome. Don't argue. Just plant the seeds of God's Word and trust the Holy Spirit to do the work in people's hearts. Number 2, be kind to everyone. There's no need to be hostile, demeaning, or disagreeable with someone who doesn't share your viewpoint. What's driving you towards such unkindness? Must you prove people wrong to validate your own self-worth? Stepping on others does not make you taller. Number 3, able to teach. Instead of trying to force your opinion on someone, simply say, here is what I have discovered in God's Word, and here is the difference it has made in my life. Your experience is never at the mercy of someone else's argument. Number 4, not resentful. Only when your own hurts have been healed can God use you to heal the hurts of others. So pray, Father, make me an instrument of peace so that people will be open to the truths you reveal to them through me. Amen. You know, for some people, the only Jesus they'll ever see is the Jesus they see in you. Go make disciples. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Yep, gonna fix that someday.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.